Well, good afternoon, everybody, and welcome to the Wednesday Lunchtime Drive-Thru on this Wednesday, June the 16th, 2021. I'm your host, Damon King. I'll be serving up your lunch today, your diet of current events and fun facts, things that you should know or probably would like to know about the world of money and finance and retirement and just all kinds of things. So, as we always do, if you have a question today, make sure you enter that in the Q&A section, or you can go down to the chat box and you can put that in there and I will see that question pop up. And I will answer it here live if I know the answer. And if I don't know the answer, then you know me. I will go and find the answer and I will report back to you, all of you who are my loyal watchers here on the Wednesday Lunchtime Drive-Thru. It's kind of funny. There are many of you who much prefer this to our radio show or even our new television show. I'm going to tell you more about that here in a second. Many of you prefer coming on the Wednesday Lunchtime Drive-Thru because it's just 30 minutes, it's quick, and you get some great information. Today's information, again, I'm Damon King, certified financial planner. You know all that part. But for those of you who are joining us for the first time, I'm with ChappelWood Financial Services. And in addition to being a certified financial planner, I teach. And today I'm teaching you 7 numbers that may surprise you. So I get all kinds of information throughout the week. And as you might imagine, when you do an event like this every week, I take a few weeks off. So, I do like 45, 48 of these every year. It's tough to come up with new stuff for you guys because I know you want new, fresh information. Well, I've got some new, fresh information for you today. And we're just going to jump right in. All right. So these are 7 really statistics, but if I'd called this 7 statistics that may surprise you, nobody would have shown up. Okay, you all would have shuddered because you would remember your statistics class from college. And nobody likes statistics except for a few people. So nobody would have shown up if I said 7 statistics, but 7 numbers. So it's been a wild ride in the market. So this is kind of interesting. People think of, you know what, I'm just going to invest in the market. That's where the market is going to get you huge gains over time. And that can be true, but it really depends on when. So if you go all the way back to 2000, all right, so after the dot-com bubble had expanded to its maximum, what did we see? We saw the bubble burst in the tech bubble in 2000. So from March 24th of 2000 until just last week, June 11th of 2021, so we're talking 21 years. Look at the cycles. The cycles that the S&P had. It was minus 47, then plus 121%, down from 55, up and down and up and down. If you had invested in the index over that 20 to 21 year period, your actual annualized returns are just 7%. Now, 7%, nothing to sneeze at. I mean, you go into retirement and you're somewhat conservative or moderately aggressive, you'll take 7%, certainly if that's net of fees that you're paying. You'll take 7% all day long because that's probably going to be sufficient for your income plan. But this belief that you're going to get maximum double-digit returns in the stock market if you just stay pedal to the metal, max risk, no, that's not true. The market over a 10-year period returns about 10%. When you stretch that out over longer periods of time, you average it all out together, you're getting about 7 to 8%, maybe a little over 8% if you factor in dividends, if you reinvest your dividends. The point to all this is that when you plan for your retirement and you put your income plan together, if you are basing the success or failure of that plan off of double-digit return expectations, you're probably going to be disappointed. All right? Because more than likely, you are not going to be investing at the max risk of the market. If you're an index investor, that means you are taking on all the risk of the market. If you want all the return of the market, you're going to have to take on all the risk. But in retirement, you're probably dialing that back a little bit, right? You've got some bonds in there. Maybe you got some cash. So you're not 100% allocated to the S&P 500, most of you. That's why when you build your income plan, you want to have a reasonable expectation for rate of return, somewhere in the 6 to 8%, maybe 9. But if you're counting on double-digit returns over time, even as an index investor, when you look at this cycle, the way the market goes up and down, and it's going to happen again, you're getting about 7 to 9% over time. A lot of people are surprised by that. Here's another one, borrowing trillions. All right. So since the declaration of a national emergency due to COVID-19, that happened on March 13th of 2020. And President Trump declared the state of emergency at that time. Well, then we saw stimulus, right? So stimulus spending by the government, that has continued under President Biden. Since that declaration of a national emergency, we have seen our national debt increase $4.8 trillion through June 10th of this year, 2021. Our national debt is now at $28.2 trillion. Ladies and gentlemen, that is $8 trillion more than our total economic output, our gross domestic product, in all of 2020. Now, admittedly, 2020 is probably not the best measurement. Okay, it was a terrible economic year. This year, it's probably going to be a lot higher. We're going to see economic growth somewhere in the range of 5 to 6%, which is almost, well, basically triple, 2.5 to 3 times more than what we normally see. The point is, though, we've got a lot of debt. So to pay for that, what do you believe is the likelihood that we're going to see tax increases before 2026? Why is 2026 so important? 2026 is the year that the lower tax rates we currently enjoy, income tax rates, are going to automatically go back up. So the Tax Cuts and Jobs Act that was passed at the end of 2017 lowers tax rates in 5 out of the 7 tax brackets from 2018 to the end of 2025. Starting in 2026, those rates are going to go back up. However, we are already seeing proposals from the Biden administration, and there is support for them in Congress, which is Democratic controlled right now. There is some support for raising taxes. Right now, they're only targeting top income earners. But you never know what's going to happen, right? What do you think the likelihood is of taxes going up before they will automatically go up in 2026? Right now, under the Democrats, I'd say it's probably a pretty good chance. If in the midterm elections next year we get a split in Congress, makes it less likely, right? So we'll see. We'll see. But chances are we're going to see before 2026, I would bet my money anyway, that we're probably going to see some tax increases before that time. Big inflation? Question mark. Are we seeing big inflation? Well, right now in the here and now, absolutely. If you look at the consumer price index for the 12 months that ended on May 31st of 2021, year over year, so you go back last year and compare it for that 12 months, the consumer price index, which is the most widely recognized measurement of consumer inflation, it was up 5%. That's tough, right? And you feel it everywhere you go. The gas pump, you go to the grocery store, you go and try to buy a new car right now, or even a used car. Prices are sky high. The grocery store, restaurants are all expensive. Everything's more expensive now. But what's the real story? Okay, 1 year does not define your retirement. If you go back over the last 30 years, the annual inflation rate was less than 5% at the end of 99% of the months over a 30-year period. All right? So yes, inflation is painful right now, but there's no real mystery as to why, right? Demand is sky high, supply is very low. It's a simple economics equation. You learned this in Economics 101. High demand, low supply equals higher prices. The question is, will the supply chain and will supply come back up eventually to meet demand and lower inflation? Looks like we had a question. Let's see here. Mike has a comment. From what I have read, 20% of all the dollars in circulation have been created in the last year. With no increase in production, how is that going to affect interest rates and inflation? Well, Mike, of course, and that's a great question. If we don't see supply come up, which is what I am interpreting what you mean by production, then yes, we would see inflation be a multi-year event. But of course, that's a big if. I personally do not believe that production levels are going to stay where they are right now. If you look at the global supply chain, most of our trading partners are not as open as we are. Okay, you look at Europe, you look at Southeast Asia, China, their economies, their worlds have not opened nearly as much as ours have. A big part of the reason for that is the United States has had the most successful vaccine rollout in the world, or one of the best. And as a result, we're getting more of our people vaccinated, and we've been able to open up sooner. However, those supply chains will come back. Right now, there are still factories that are shut down or at minimal capacity. There are lumber mills that are shut down or at minimal capacity. There are mining operations that mine our gold and silver and copper and platinum and palladium and aluminum, and that go into all the products, the iron. Those will eventually come back. Now, so I'm not that much concerned about the production. However, Mike, to your question about interest rates and inflation, I believe inflation will come back down as supply comes up. To me, that's not the real issue. The issue is the Federal Reserve. Do they believe that inflation is going to be stabilized? Do they believe that production is going to ramp back up to meet demand? We're going to find out here in about 2 hours. Well, actually, in about an hour. Okay, so the Federal Reserve is meeting yesterday and today. In about an hour, Fed Chairman Powell, so watch the news. Okay, ordinarily I tell you don't watch the news, but today you might want to pay attention, because here in about an hour, at around 1:30 our time, 2:30 Eastern time, Fed Chairman Powell will give his press conference, and we will hear what the Federal Reserve currently believes about inflation, and therefore the likelihood that they will raise interest rates. Right now, I am expecting them to say they are going to keep interest rates where they are right now. That doesn't mean they won't allude to potential increases later on down the road if inflation looks like it's going to be a longer term than a year, but right now our expectation is that interest rates will stay low, inflation will eventually stabilize. We will not see 5% annualized inflation over the next 2 or 3 years. I don't have a crystal ball, though. I don't know exactly what's going to happen, but based on what we're seeing and hearing, that is our expectation. Dan has another great comment. So Mike, thank you for that, and you and I talked about that recently. And so I appreciate that comment. Dan has another comment here, or a question. Could part of the inflation factor be due to transportation and freight costs going sky high, particularly any product being shipped from overseas? So friends in that business tell me. Absolutely, Dan. That's the thing, is that this entire world, this is an interconnected world. You are now seeing the true impact of a globalized economic system. If we only cared about the products made in the United States and we only worried about us, actually our prices would probably be higher, because labor rates in the United States are higher than they are in other places in the world. But absolutely, we are seeing inflation due to lack of production, as Mike has mentioned. We are seeing increases in energy costs, all right, because the supply of gasoline, the supply of oil is down, because you've got a lot of, a lot of the OPEC nations have cut production anyway, but you've got here in the United States, you've got a lot of wells that are simply offline. Costs have gone up to transport things, whether it's shipping, trucking, trains. If you go and look, I was looking at Union Pacific Railroad, and they measure their expenses like per 1,000 pounds of freight or something like that. And their per 1,000 pounds of freight costs have gone up, all right? So everything is more expensive. So it's not just the production has gone up because of pulling stuff out of the ground and cutting down trees in the lumber mills. As Dan mentions, it's also due to transportation costs. Now, what's interesting is that the consumer price index has gone up, but so too has the producer price index. So the CPI measures what you and I pay for products. The PPI, the producer price index, measures what manufacturers and producers are paying the raw materials to create the items that we make. That index has also gone up, But there's not as much of a gap between what they're paying and the price that they're charging us, as you might think, which means manufacturers and producers are eating a lot of those additional costs. Why? Because we are just now getting back out to buy stuff. We are just now spending our money. We're ready to get out. They know that. If they pass on 100% of that cost to us, I guarantee you inflation would be a hell of a lot higher than 5%. So there's part of that as well. A lot of manufacturers, a lot of producers are eating those costs to the extent that they can. Of course, they still have shareholders, us, to respond to or to answer to. So good questions from Mike and Dan. So inflation is an issue right now. It's probably going to be an issue for the next year, certainly through the end of this year, because what is inflation? Inflation is a measure of prices today versus the same time last year. Well, all throughout 2021, the prices are going to be higher than they were last year. So it stands to reason that over the next several months, we're going to see inflation higher because prices are higher than they were last year. As we get into 2022, though, and now we start comparing next year to this year, will we see the same numbers? Right now, we lean towards no. But it really remains to be seen what happens. It's still too early to tell at this point. But we don't believe over the long haul that inflation is going to stay at these levels. We believe they will come back down. One way or the other, they're going to come back down because, as Mike mentioned, if inflation stays this high for such a long period of time, then the Fed will be forced to raise interest rates to try to bring that down. But right now, I'm expecting here in their announcement this afternoon, they're going to say, no, we're not raising interest rates. Number 4, help wanted. Job openings in the United States climbed to 9.3 million by April 30th of this year. That is the highest ever recorded number of available jobs in the United States at any point in our history. Ever. You go back to the financial crisis, all right, even the depths of the financial crisis, there were just 2.1 million job openings at that time, all right? We do not have a shortage of jobs in this country. Not a shortage of jobs. What we have is a shortage of labor. And more to the point, a shortage of people willing to take those jobs. So I'm going to ask you, what do you think are some of the reasons for this? You go everywhere. You see help wanted signs everywhere. Restaurants can't find enough people. Retail outlets are trying to open back up. They don't have enough people, so they're having limited hours. What do you think are some of the reasons? I'd be interested to hear. What do you think are some of the reasons why we see so many jobs? I have my personal opinions as to why, but I'd be interested to know what your opinions are. Why are there so many job openings, yet there are not nearly as many people willing to take those jobs? I mean, didn't we lose a bunch of jobs in COVID? Aren't people ready to get back to work? Are they ready to get back to work? I don't know. I'd love to hear your thoughts on the matter. Number 5, guess why? In 2019, births exceeded deaths by 893,000 in the United States. In 2020, deaths exceeded births by 227,000. Now, one obvious reason that we saw an increase in the number of deaths, COVID-19, we had a global pandemic. Hundreds of thousands of people died that probably wouldn't have. So we saw an increase there. But we have been seeing a decline in birth rates in the United States for years. What do you think the reasons are? So today, it's not just me giving you my explanation. I want to know what you think. Why do we see so many job openings right now? What do you think is causing a decline in overall birth rates in the United States? And I will tell you that the declining birth rate isn't just an economic problem. It's a tax collection problem. Fewer taxpayers means fewer tax dollars collected. You know what that has implications for? It means fewer people paying payroll taxes. You know what that means? Fewer people putting tax dollars in to support Social Security and Medicare. Probably don't think about things like that, right? but it's important. It's important. We did have another comment pop up here. Oh, let's see, we got a question. Okay, I already did those two questions. And we've got a couple of others here. What do we got here? Okay. All right, so Lynn answers the question, why does she think, here's her opinion, why does she think that we're seeing so many unclaimed jobs? Well, it's from the unemployment bonus that a lot of people are getting from the United States government. And that is something that we're seeing. We are seeing a lot of people who, in their opinion, it is more financially advantageous to collect the unemployment check than to go back to work. So we are seeing that. That's exactly right. You know, and my question to them would be, okay, I get that maybe today that money that you're getting in unemployment, you need that. I don't want anybody to go hungry and not be able to feed their family. But my question to them would be, look, that's eventually going to run out. Now, there are some states that have stopped it, like Lynn is in Missouri. Here in Oklahoma, we've stopped it as well. Okay, we're not accepting any more federal dollars. A lot of states are doing that, but the benefits are going to run out in September anyway. So I would say, shouldn't you at least go out and start looking for a job, have something lined up, because that benefit's going to go away again. And one thing is certain, you are not going to get wealthy off of unemployment benefits. You cannot build wealth off of unemployment benefits. You may not be earning a lot in your job, but at least that's a pathway. Perhaps you could participate in the retirement plan. Okay, perhaps you can get raises. Perhaps you'll get a promotion. You're not getting a promotion on unemployment. So as a financial advisor, I would say, I understand in the short term, unemployment may be better, but in the long term, for wealth building, you want to support your family, you want to leave a legacy, you got to go back to work. Ellen makes a comment, that's a sobering statistic about births versus death, probably half COVID related. I'm not going to argue with you on that one, Ellen. Birth should be back up in 2021. I also agree with that. Okay. I mean, number one, we don't have a pandemic going on. However, there's, okay, without diving too much into human reproduction, we're all out again, right? We're all traveling again. We're all excited again. I read a statistic that the percentage of people who engaged in relations in 2020 went down significantly because we were all depressed, right? The sex rates are going up this year, which probably means we're going to see a lot of babies. So, so we had baby boomers. Are we going to call these? Are we going to call these pandemic babies? Maybe, I don't know. You tell me. So that's probably true, Ellen. We're probably going to see birth rates go up quite a bit this year, as well as a decline in the overall death rate, which you would expect births are going to outstrip deaths again. All right, number 6, heading out of town. Between July 1st of 2019 and June 30th of 2020, 5 of the 10 largest U.S. cities saw a decline in their population, and those are New York, LA, Chicago, Philadelphia, and San Jose. Now, where are those people moving? Well, they're moving all over the place. Some are moving out of the country. But in general, the biggest recipients of those transplants are Texas and southern states, okay? People are leaving in droves, high tax, high regulation, high cost of living states in favor of places with lower taxes. In the case of Texas, there's no state income tax. There's no state income tax in Florida either. There's no state income tax in Wyoming. In fact, if you are looking for the most tax advantageous state to live in your retirement, you know where that is? It's Wyoming. Wyoming has one of the best tax systems, at least in terms of you and me, people, anywhere. Their taxes are extremely low. Now, there's a good reason for that. They have a very low population as well, so they're trying to get people to move there. Trust me, if I could live in the winter, I would absolutely retire to Jackson Hole, Wyoming, which interestingly is where the Fed is going to be having their summer meeting. That's where they meet every year. I love Jackson Hole, Wyoming. In fact, I've told Victoria that at some point, I'm leaving Oklahoma for a couple of months in the summer when it's like 1,000 degrees and you feel like you're living in hell. And I'm going to go to Jackson Hole where it's 72 degrees most days and during July and August. I'm going to rent an office for ChappelWood up there. I can conduct business with clients remotely, and then I'll write the whole trip off as a business expense. Okay. See, always thinking about the financial side. You got to do that too. All right. Number 7, our last one for today. Better than expected. 29 of 50 states collected more in state tax revenue in the pandemic year from March 1 of 2020 to February 28th of 2021 than they did in the pre-pandemic year of 2019 and then right up until the pandemic started. Why? What's the reason for this? I actually don't know. I'm asking you, what do you think? Why do you think we actually saw nearly more than half of the states actually increase their tax revenue in the pandemic year than they did in the year before that? Well, one of my thoughts, one of my theories is that now more states have implemented laws and rules to collect sales taxes for online purchases. Remember, for many, many years, if you bought something online from Amazon or wherever, they would say, do you want to add sales tax to this? Do you know how many people I know of that voluntarily added sales tax? This many. You know, absolutely. I'd love to pay the government more money. Where do I sign? How come no one asked me this before? I've been waiting to give Uncle Sam my money. No one paid that. But now you call it use tax, right? And so more states are collecting sales tax for online purchases. Well, digital buying went up through the roof in 2020, right? Because you couldn't go out. You bought everything online. So one of my theories is that with the increase in online buying, we actually saw more people buying stuff online than maybe they would have if they went out to a brick and mortar building or a brick and mortar store. So yes, 2020 was tough, but don't always believe the doom and gloom that you hear. It wasn't bad everywhere. It's never bad everywhere at the same time. In our system, our economic system, we're not communists, we're not socialists, we're capitalists, free market. And in our system, when someone's losing, someone's winning, right? So why not try to be the one that finds the way to win? All right. So what are some other thoughts and questions? We have just a couple of minutes left here today. Anybody have any other thoughts or questions that they'd like to share about any of the questions I asked today? Why do you think we have such an excess of jobs available? What's causing, the decline in birth rates? Well, I've got another question here. Wendy has a comment here. I agree that the stimulus money with unemployment is a large factor, but she's going to play devil's advocate. She's got another side to look at. As someone who is looking for a job, I am finding that employers are paying less, 25 to 50% less, than pre-pandemic wages for the same positions. A lot of positions are part-time and benefits are reduced. So there you go. That is another perspective. And that is happening as well. Thank you, Wendy, for sharing that. Because a lot of people think, depending upon the way you operate, a belief is that, these bums are just sitting at home. Why don't they go get a job? Yeah, they may be minimum wage, but just go get a job. And some people might think that. But in Wendy's case, Wendy's not a bum. In fact, Wendy, nobody knows your last name. I'm not going to, unfortunately, Wendy experienced a job layoff, So it's through no fault of her own. She had a great paying job. She's a professional. She's out looking for a job that is commensurate with her skills. She's not looking to flip hamburgers at McDonald's. But it's tough to find a job out there because, yes, a lot of employers are choosing to pay less right now, okay, for the same positions. So thank you for sharing that, Wendy. Mary has a comment here. She says, I loved college statistics. Well, Mary, it's a good thing you and I get along and like each other because I hated college statistics. I mean, I did okay in it, but I did not, He said, today we're going to do regression analysis. When I hear the word standard deviation, oh, my skin crawls a little bit. But I like statistics too. I like numbers. John, I saw that you raised your hand. Did you have a question that you wanted to ask? If so, you can put it in the Q&A bar down below, or you can put it in the chat. I'd be happy to answer your question, or if you just want to share a comment, please feel free to do so. John, if you raised your hand, so go ahead and put that in there. Are there any other questions any other thoughts that anybody would like to share today? Really lively. This is one of our liveliest chats that we've had, right? But it's kind of interesting, these numbers. While you're thinking about your question or your thought, I want to tell you all about our new television show. So our new TV show debuted this past weekend, and the name of our show is It's All About the Money, Honey. It's a 30-minute television show. Now, it airs locally in the Oklahoma City area. However, for those of you outside of Oklahoma City, and really outside of Oklahoma, and we have many of you from out of state who watch, you can join in on the fun as well. All you have to do is go to YouTube and look for the Financial Diva channel. That's Financial Diva all together, one word. And at that channel, that is our channel. And if you look for the playlist, It's All About the Money, Honey, you will see all the episodes there. Now, so far, we've only got one episode. And every week after the episode airs on TV, it'll be added to that channel, and you'll be able to watch our show that airs every week. Let's see, we did have a question here. Yeah, John. So John has another comment here. I agree with Wendy. I have not had an increase in pay in 2 years. That's another issue we're seeing, right? Now, John has a job. He's not unemployed, but he's not gotten a raise from his employer in 2 years. So maybe one of the disincentivizations, is that a word? I don't know. People may be disincentivized to go to work simply because they didn't get a raise, but they have not seen an improvement in their financial situation. And if their unemployment check is bigger, for them, staying at home, if they're unemployed, staying at home and getting that bigger check for the next few months is better than going back and getting a smaller paycheck that you're not sure is going to go up. So there are lots of reasons. It's never black and white. There are always shades of gray. In fact, I do not trust people who only see the world in black and white. Nothing is absolute when we're talking about things like this, okay? There's right and wrong, but these are matters of opinion. These are matters of perspective. And in those cases, it's never just black and white. There are always shades of gray. All right. Thank you, John. I want to thank everybody for participating today. I want to thank Mike, Dan, Wendy, Mary, John, Lynn for making a comment. Who else had a comment, chat here? Ellen, thank you so much. And make sure you check out our television show. It's All About the Money, Honey, either live or you can catch the recording on our YouTube channel. Well, it is just now past 1 o'clock, and so that is the end of our time together today. So I want to thank you so much for joining the Wednesday Lunchtime Drive-Thru. If you have a topic that you would like to feature, or you would like me to feature on a future episode of the Wednesday Lunchtime Drive-Thru, or for our television show, please email me at damon@chappelwood.com. If you email me, I've proven it. People email me topics, I talk about it probably the next week. I'll make you a star. I'll make you famous, okay? So send that to me, and I'd be happy to share it. So thank you so much for joining everybody today. Appreciate your time. And with that, I bid you good day. Have a great rest of the week. Have a great weekend. We'll see you next time.